So capital expenditure requirements is anything related to the machines or the tools that we have. So our free cash flow, what we do is we're going to add up our operating cash flow plus, which we don't have any of, our working capital cash flow plus our capital expenditures. So our year zero, question A, year zero total cash flows would be $7.7 million. So that's question A. What's the year zero net cash flow? Now, B is a little bit harder. What are the cash flows for year 1 through 5? Well, let's just work on year 1, and then we can copy everything over, okay? So operating cash flows. So revenues are always units sold times how much we sell each one for. So $7.5 million that we have on there. Our variable cost would be the same thing, number of units sold times the variable cost per unit. So $750 per unit, we would have that. Any fixed costs that we have, our annual fixed cost is $1 million that we see. And then depreciation, here's where it gets a little bit tricky. Here's where we calculate the amount that we're allowed to depreciate for the year. And we start with our depreciable basis, our $6.7 million, times the rate that we're allowed to for that year, 20% for that year. Now, I'm going to go ahead and lock in C27 because what I want to do is I want to copy this formula over and keep every cell relative except for that one right there. Okay, you'll see what I mean in a minute. All right, so now our net operating income, we're going to add up those four numbers to give us a net operating income of $1.41 million. And this is where we calculate our tax expenditure or tax liability. Okay, so we know it is $1.4 million times our 34%. That's our tax rate. Okay, and I've included the negative to show that it's a negative cash flow. So we owe $479,000 in taxes. And I'm going to go ahead and add those two together to give me my operating income after taxes for that year. But this is where it gets tricky. We have to add back in our depreciation. So I do equals and negative to make it a positive to show it's something we add back in. And then we can do our adding of these two cells together. So that is our operating cash flow for year 1. Now, if I set everything up correctly here, I should be able to highlight this and just copy these cells all the way over to get the correct cash flows that we have every year that we see. Now, I can see an error that I did right here because I did not lock in my my cell with my tax rate. It actually changed it. So I'm going to lock that one in, and let's try it again. Highlight all these, copy it over, and there we have better numbers. So now it's correct. So it's one of the things that you can do if you're going to copy those rates over. Now, this is operating cash flows. This is from revenues and costs of sale of the goods and services. The second step we have to look at would be, or this is actually the answer to A, what are the net operating, or B, what are the net operating cash flows for year 1 through 5? So these are the net operating cash flows year 1 through 5. Other costs we have to look at for year 5, it says we're going to recover this working capital of $1 million in the last year. So that just means we're going to add that $1 million back in for year 5. And notice this check, if we do everything right, this check is added in here to add up all these numbers to make sure that they break even zero. We have done it. No other costs, no other things we have to work on, no extra capital expenditures. So the last thing we can do here is copy this over, add up all three cells, the operating cash flows, the working capital requirements, and the CapEx. And that actually gives us our free cash flows upon which we can do our NPV, IRR, and modified IRR analysis.